And if you're planning on going green, it's going to cost you. The price of a special material needed for most solar panels is skyrocketing. NTD's Phil Zhou has the story.
Going green just got more expensive. The price of silicon that's used in solar panels is heating up.
Price of polysilicon have gone up by about somewhere in the region of 400 to 500%, which is obviously an awful lot.
Polysilicon is a key component for most solar panels. Prices exploded from $6 per kilogram last year to a whopping $36 per kilogram as of last week. This translates to solar panel prices going up about 20%. But Anthony McGuire, director at Longevity Power, says customers are still flocking to him to install solar panels.
The price of electricity has gone up by around 50% in the UK alone, and that's a similar story in the rest of Europe and beyond. So the return on investment actually looks better today for solar cells than it did a year ago.
He believes the solar panel price increases are temporary and argues that the cost of electricity goes up consistently. The director of the Singapore Solar Exchange says it's been a crazy year, and although prices could stabilize by next year, they'll probably go up. Another reason for the high prices is that many silicon factories in China have shut down. Bank of America says that for the world to reach net zero for carbon emissions, it would cost $5 trillion annually for the next 30 years, which is twice the current global GDP. Phil Zhou, NTD News.
And Paul, as you may already know, is at day 3 of the New Orleans Investment Conference. Here he is with precious metals expert and portfolio manager Tavi Costa.
So it's day 2 at the New Orleans Investment Conference. We're delighted to be joined by Tavi Costa this morning. Costa is a portfolio manager and a partner at Crescent Capital. He's also a precious metals expert. We're really happy to have him here. Tavi, pleasure to see you.
Thanks for having me. Appreciate it.
I've seen you on the stage a couple of times. We've seen some other speakers already over the past couple of days. What do you think of the key themes so far this year?
Look, I think clearly people are starting to catch on to the idea of owning tangible assets. Clearly people are starting to realize the real need for protection of capital given what's happening with monetary and fiscal disorder environment that we've been in for some time now. And I think there's a lot more to go. There has been a lot of optimism in different parts of the commodity space. I've been noticing perhaps a little bit of weak sentiment in precious metals, which for me is very attractive as a timing indicator. And so, yeah, it's interesting. It's always great to be in a conference like this and have conversations with people and see what their ideas are. But I'm enjoying this.
At some point yesterday you spoke about the prices of commodities, but also the reserves of commodities. Maybe you can give us some idea. What does that tell you about how inflation may or may not be a little bit more persistent than some people are expecting?
So there's this great debate in the macro world of deflation versus inflation. And what I think the deflation side of the equation is missing is this long-standing capex decline between especially among the natural resource companies. I think we've been seeing this for some time now, and it's starting to, inevitably, we're going to see raw material shortages. It's just that the pandemic issues really accelerated that in a large way.
Do you put that down to excess demand or supply chain issues, or what do you put it down to?
It's certainly a supply problem right now that has been also intensified by massive fiscal stimulus that created demand on the other side. And so the demand side is not as strong as you would think in regards to the sustainability of that demand over the long period of time. What is really interesting is the supply shock. You know, we're seeing, let's use energy for instance. Energy companies, if you look at where they are trading today at very cheap multiples, but if you look at the capex estimates are basically at multi-year lows right now. And if you check the estimates of those capexes, they're not really going to be increasing anytime soon. It's the first time we're seeing this. I mean, usually energy prices go up, companies become optimistic, they spend more money in the ground, it creates further supply, and then it corrects the prices, and that's how the cycle of energy works. And energy has a shorter cycle, for instance, relative to other commodities. And I'm not sure that's going to happen here, given the political effort on ESG policies, the difficulty in general of finding some natural resources, not only oil, but talking about precious metals especially. So all those are becoming part of the equation in a larger way. I think supply is a bigger part of the story than the demand side. For most commodities, obviously copper and some others may have different attributes that may play into it.
Of course, traditionally we always thought in times of inflation, the place to be is the precious metals. They've kind of underperformed, I would say. They've disappointed a little bit over the past 12 months or so. Why do you think that is?
So there's certainly a very clear correlation between gold and CPI, or the government data for inflation, to gauge inflation, especially since the global financial crisis. What we saw there was that gold has been on a streak basically since 2018. It was up about 75% from August 2018 to August of 2020. This is way before most of the moves in inflation. So gold was basically front-running a lot of the inflationary problems that we're seeing now. And then, no one was talking about the divergence between CPI, basically, very weak numbers coming out of the pandemic lows, at the same time as gold was taking off. And then we saw the opposite, where gold took a break. Maybe gold got ahead of itself in a short time, and we saw inflation going a lot higher. So I think this correlation still is the case. It's just one, gold got ahead of itself initially, and now CPI got ahead of itself relative to gold. I think it's a sustainable move to the upside on inflation. I don't think this is as transitory as policymakers think at all. Obviously, it's still up for debate, but I really think that the psychological shift in consumers is happening in a large way. And when that builds up in the system, you start really seeing inflation growing more organically. And I think that's going to happen just like we saw in the 70s and what we saw in emerging markets over many decades. And so this is a regime change in the market, and I don't think a lot of marketing participants are seeing it that way.
Interesting. Tavi Costa, Crescent Capital. Appreciate it. Thank you.
Thanks for having me.